I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Wednesday, March 31st, end of the month, end of the quarter. We talked about it in yesterday's Tech Talk. Expect fireworks from today's USDA report. Fireworks is exactly what we got. We got a limit up move for both corn and soybeans, which give us expanded limits tomorrow. And we expect to see that taken advantage of at least a little bit and see some follow through in the overnight session. And tomorrow's session. Markets close on Friday with Good Friday. Now looking at the synthetics and where we would have been trading had there been no limits, they had May corn trading about 15 cents higher than where we closed, and May beans about 10 cents higher. So we expect to see some follow through. We've got the May corn chart pulled up here. And we got out above technical resistance, basically putting us back in uncharted territory. And you've probably heard me say this a million times, and I probably sound like a broken record, but we look at technical support and resistance levels as previous interaction points between buyers and sellers. Now that we're back up here in uncharted territory, we don't really have that. So this is all about momentum, and we think that that's going to continue and could potentially take us towards that psychologically significant $6 handle. With the acres number that we got, the USDA came in with about 91 million acres, well below the average analyst estimate, and I think well below what some had feared. And worst case scenario, come out with 96, 97 million acres, slam the market. That was not the case at all. So you saw that renewed optimism come into the market, and I think we'll see some follow through buying take us towards that psychologically significant $6 handle. The other thing we're keeping a very close eye on is that fund position. We know that they've been net long 300,000 plus contracts for several months, and they typically don't hold that long of a position for that long. But there seems to be real paper demand, and here recently those position limits for funds nearly doubled, so they do have powder to add to their long position. On the flip side of that, commercials and producers are near record short. So if you have the funds taking advantage of a new net long position limit, that could potentially put a squeeze on the shorts and take this market well past fair value. What would be a catalyst to do that? Obviously, weather would be the big one, especially this time of year. We know that it's been pretty dry in some areas. I'm not going to say that we're in a drought, and a very concerning drought at this point, but there are some concerns in some isolated areas, and it will be monitored closely. And if that does play out a little bit more, you could potentially see the funds add to their position and put a little bit more of a squeeze on these shorts here going forward. So that's what we're looking at for corn. Moving over to the soybean market. Limit up, as I had mentioned. We talked about this in yesterday's Tech Talk. 87 million acres. That is well under the average analyst estimates. That puts us right back here at the top end of the range. If we get out above here, as mentioned with corn, we're back in uncharted territory. And finding technical resistance in uncharted territory becomes a fool's errand, and it becomes more about momentum. So the trend is your friend until the end when it bends, and right now looks like the momentum is starting to roll pretty heavily in the bull's favor as we start to head into spring planting, and especially with a lot less acres than we were expecting, there's a catalyst there to feed the bull a little bit. Weather obviously going to be very important, probably not as important as it is with corn, but still something to be monitored very closely. Now, wrapping things up with the feeder cattle, we saw a sharp move lower after the report, which you would have expected with the move that we saw in corn. So we saw this big drop. We rebounded to the breakdown point and then sold off a little bit on the close. I wouldn't be surprised to see a little bit more weakness come into this market as we look in to wrapping up this week's trade with tomorrow's session. Love to potentially be a buyer against this trend line support, but if we continue to see strength in these grain markets, that could put a little bit of a headwind in feeder cattle here in the near term. So that's what we're looking at. That's what you should be looking at too. I also wanted to congratulate 3 winners. We had 3 people call the close on both. They said limit up corn and beans. 3 people said that. Congrats to Paul, Rocky, and Robert. Your championship trophies / mugs will be in the mail here shortly. If you have any questions, feel free to reach out. Send me an email, oliver@bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.